Hello and welcome to episode 184 of the Money to the Masses podcast with your resident expert as always, Damien Fay and me, Andy Leaks. Damien, before we start, what a match last night. Can you believe England won 4-0? What a game.
Obviously, we have no idea what happened in that one. We'll probably be despondent, Andy, anyone listening to this. So we're cheering.
We could be out by now.
We're cheering up the nation by talking about money. So, let's hope that it's actually a positive. I'm not watching the match, unbelievably. I'm being when you get one of these things that your children, it's a theatre show they've been planning on and working towards for months.
Yeah. And
it just so happens it's now fallen on the time of the game. But I might be able to sneak out and catch some of it. So there's always everyone's got a story like that, haven't they? Where life gets in the way of football.
Well, funny you should say that, actually. I noticed on the BBC News app that they did a story on the last 16 England qualifying, and then at the bottom it said, contact us if you can't watch the game, or if you're at a wedding, or if you're stuck. What are you going to do? How are you going to deal with it? They're obviously fishing for some nice, cheap, easy stories to bang out on the morning of the game or whatever, as journos do. But I thought that was quite interesting. You should get in touch.
Well, do you know what they've done, or what they did, as this happened in the past? They're going to put up a screen in the theatre, because the rehearsals are happening beforehand, and that's when the game's going on. But we have to be there with our children, so we can't just dump them there. Right. But anyway, I would ask you how you are, Andy, but it's a slightly rare occurrence that we met during the week, didn't we, and had lunch. So
we did. We caught up and had lunch, so we don't need to bore the listeners with that. I don't know if they. So, do you know, we've been contacted, haven't we? Some people have contacted to say, "Oh, it's really great that you've got this sort of relationship and you catch up on the pod, and it's really nice to hear sort of a light-hearted thing around money." But then some people say, "Yeah, less of the chat."
Yeah, I think less people have said that. I think there have been, and we veered off, and then people complained that we weren't being our normal selves. So, we have caught up. But one thing I do know you got up to, Andy, you helped a podcast listener who planned to move to Watford.
Yeah, that's right.
And I picked up the fact that you lived in Watford, should I say. You don't live there now, and asked where to live and where to avoid.
Yeah, so thanks, Ray, for getting in touch. It was really nice to sort of relive my Watford youth, going through, just letting Ray's got a family member, I'm sure he won't mind me saying that, maybe move him to Watford in the future. So I was just letting him know the sort of the whys and wherefores of Watford, what to look out for, the good, the bad, the ugly, all that kind of stuff. So it was nice to sort of retrace my old steps and help a listener out. So yeah, if you've got any questions about the traffic situation in Watford, where to live, then yeah, do get in touch. I'll be happy to help. Damien, what have we got on this week's
Right, we got an investment piece. This was inspired by somebody asked me once about what do I look at and check and to do with money when I wake up, or when I'm looking about investment markets. And I'm really anti people who are investing for the long term, keep checking their portfolios, because it's long term investing. If you're always nervous about where markets are going, then you're speculating. So I'm going to just tell people what I look at, and it gives me a quick snapshot by looking at certain numbers on a certain app, which you all got on your smartphones probably, that I can sit there and guess pretty much what the big stories of the day were without even having to look at the newspaper. So I'm going to tell people what that is. I'm going to talk about reliable cars, or more importantly, unreliable cars, which is obviously aimed at trying to save people money when they buy a new car. And we've all been there, Andy. And it's a subject we touched upon, I think, quite a long time ago, but it proved quite popular because we've all bought a car and wish we hadn't, where it's gone wrong. And then we've learnt from experience that actually everybody who owns this type of car has the same problem. So I'm going to touch upon that and how you can avoid the unreliable cars out there. And the final piece is just a nod towards insurance, and in particular home insurance, about the idea what happens when your neighbour actually damages your property. And there was somebody who complained to one of the nationals and asked about a question as to why their insurance had risen. And I want to talk to you about that and perhaps how you can stop it. So there we go, Andy. Which should we start with?
Great. So we've got cars, we've got home insurance and a piece on that. We've also got how to read between the lines in terms of the headline numbers in investment terms. So should we go for the investment piece first? I'm interested in this. Not that I'm not interested in the rest, but I look at those numbers on the app. You're probably going to explain in a little while. And I think I actually don't understand what that means. means or what I can read into it. Are you going to give us some insight?
I'm going to give you some insight, Andy. Now, if you have an Apple phone, so an iPhone, they come by default with an app called Stocks, and there's a certain number of things that by default are in there. They normally put it in, I think, some of the American indices, obviously Apple's share price, but you can amend that. And if you're into investing, it doesn't matter that you're not investing in some of these companies that I'm going to mention, but what they are, I use them as indicators as to what's going on at the moment. Now, this is pretty evergreen, like I try and make most podcasts, but there are one or two things that I'm going to tell you that are relevant to the current situation in stock markets. So, if you open the app that you would have on your phone that would be to do with stocks, I'm going to tell you the indexes and the shares that I put on mine just to give me a quick insight to what's going on. So I can open it and go, right, okay, Donald Trump is obviously kicking off about trade wars again. And it's all from the numbers. Now,
Damien, shall I do this live with you? Because I've never touched this app. I've just left the basic stocks that are showing on the app. So are you going to go through some key ones which are good to put on yours, and I could do this live?
Yeah, we could do this live, Andy. Do you know what? This has been amazing. I've done this podcast many a time, and I'm actually doing it around my brother's house because my neighbour is building again. And his wife has just walked in the room and delivered a cup of tea to me. So I've never had that. So this is a first, Andy. So
are we going to get Sam's voice on the podcast? No, is she gone?
She's run off because I think she's worried that she would be on it. But Andy will cut out my tea slaps, so I'm going to have one now. Right, get your app out. The first things I would put on an app are the exchange rate between the dollar and the pound. So if you go into edit on your app, you will end up putting in GBP USD, and that will give you the pound. You'll find a range of things on there, but what it'll give you the pound to dollar exchange rate. And have you found that one, Andy?
I have, yeah.
Yeah, so there's going to be a few of these. You might not be able to keep up with me. Now, that one is important because if you think about your portfolio, a lot of what goes on in the investment world is impacted by currencies. Now, if you hold a foreign, particularly a US fund, what will happen is when the exchange rate, so when the dollar appreciates against the pound, it means that when you convert back the value of your portfolio, so your fund, if the pound is falling, in dollar terms, what it's worth is worth more in pound value. So when you open your app in the morning, ignoring what's going on in the markets, if you see a big negative sign on there, so it's red and it's saying it's down 1 or 2%, you can tell that you're going to get a buffer from that, probably for your not only your global funds, but also, interestingly, the FTSE 100. Now, the FTSE 100 will probably be on your app by default. If it isn't, you just type in FTSE 100 and you'll find it. Now, what I look for on those two is how they interact. So if I open my app today, I can see that the pound will have fallen slightly and the FTSE will have gone up. That general metric works because obviously the FTSE 100 derives a lot of its, the companies in there derive a lot of their earnings from overseas, and particularly in dollar denominations. So therefore, if the dollar gets stronger or the pound falls against the dollar, when they repatriate those earnings, it actually gives it a boost so people buy the FTSE 100. If you see that relationship going, or in the opposite way round, so if the exchange rate rises, so the pound rises against the dollar and the FTSE falls, you go, yeah, that's kind of how it works. They normally work in a similar fashion. So if the pound rises 1%, don't be surprised if the FTSE falls around that. What's interesting is when you see that break down. So I look at that, and if it breaks down, then that normally means that something else has happened in the market to cause the FTSE to probably fall. So that could be some bad news on a particular stocks, but typically it'll be bad news globally on the stock market. Aside from that, I will also have the FTSE All Share, which is FTAS in the app, and so you can add that one. That's just a broad index of across the indices for UK companies, so it's not just the top 100, it includes the next 150, etc. And the other one I have is the FTMX, which is the FTSE 250 X Investment Trust. So what it means is it's the smaller companies, the mid to small cap companies, and that index behaves differently to the FTSE 100 because that index is normally more sensitive to economic stuff that goes on. So if I see the FTSE fall and the small cap one go up, that tends to suggest to me there's probably something going on that might be positive news for the UK economy. So, because if there's good news on the UK economy, then the pound will go up. Probably the FTSE might go down a little bit because the pound's gone up. But the economically sensitive small cap index will probably go up because it's good news for small companies. If you've got a small company and the UK economy is going well, you can probably tell that that's going to be good news. So by looking at those numbers, you can probably get a steer that, yeah, do you know what, I reckon Mark Carney's opened his mouth somewhere and said something. And on today's numbers, that's what happened. I mean, sorry, yesterday when we had it, that's exactly what happened. Mark Carney started saying, do you know what, the economy's looking a little bit brighter. And that combination happened whereby the FTSE all-share went up and the FTSE 100 didn't. Now, the other one I would add on there from a currency perspective is if you put GBP EUR, so that's obviously the pound and the euro. Again, that's the same thing. It's the pound against the euro, and if the pound falls against the euro, it means your European equity funds will do quite well. And that is a good barometer anyway about Brexit, because if the Brexit negotiations are starting to falter, or for some reason the European Central Bank is deciding that they're not going to print any more money, or they're going to sort of cut QE, the currencies will move. So in that instance where they're going to sort of stop monetary easing in Europe, the euro will strengthen against the pound. And so that movement is quite a good, if you see something move quite large on that index, and you see that the one for the pound and the dollar hasn't moved as much, you therefore know it's not the pound that's doing the magic movement, moving around, it's the euro. And that will tend to mean that there's probably been some news about the strength of the EU economy, or possibly even something to do with Brexit. The Brexit element will probably mean that both the pound will fall against the dollar and the euro. And the next one I have on my list is VIX, and VIX is quite a good one because it's the fear gauge. It's actually a measure of volatility on the US stock market. So I look at that, and I'm looking at it today, and the VIX had jumped up to 15, but it's dropped 7%. So, sorry, it went up to about 17 and it's dropped back down to 15. And as a percentage fall, ends up being about 7%.
Is that a big percentage drop in the grand scheme of things? It's hard to gauge, what to compare that to.
Do you know what? Good question, because in the VIX they do sometimes jump. It is quite a decent size, but we've seen far bigger ones. So when the fear really hits, not even crazy like fear, when people suddenly get a little bit like, a bit surprised, it will go up about 10 double digits. That's when you start to notice things are changing. So if I open my app and I look at that VIX is falling, like it is today, it's had a bit of a drop, I know that in the grand scheme of things, what's probably meaning is that equities are going to probably they're going to pick up. And I look at all the other indices around that I'm going to have on my app and see if they're green, because it probably means that, yeah, do you know what, the fear that's currently in the market, and at the moment the biggest fear is trade wars, there's probably been something that's happened that has relieved that. And yesterday, for example, Trump was suggesting he wouldn't impose such strict tariffs on EU cars. So that gives you a sense. Already we're looking at it, and you're looking at the currencies, you've seen what the UK equities are doing, you're looking at that fear gauge, and you can, by combining them, you can get a sense that, do you know what, I think the fears come out of the market slightly. There's obviously something somebody said. You can go and look for it. Probably is it Mark Carney? Is it Donald Trump? And by using a combination, as you can get quite a good guess. The other one is you type in TNX. Now some of these codes aren't obvious. Now the TNX is actually the 10-year yield on the US Treasury, and it's one of the ones that we said before is that it's at 2.84 as I talk. But as it gets higher, that starts to put pressure on the US economy, and if it gets too high, that might start raising the cost of borrowing in America, and then start putting downward pressure on potentially equities in the long run. But more importantly, if that figure is going up, it means the bond market is probably not faring very well. So I use that as a quasi measure of what bonds doing today. So I look at it, and the yield has gone up slightly today, and yields move opposite direction to bond prices, or in this case it's treasuries, but it's a good measure of bonds generally. I can see that, yeah, do you know what, bonds are not having a great day today. So I know the bond area of my portfolio probably won't be doing so well. Am I making sense, Andy? Are you learning?
Yeah, you really are. And do you know what, as you're telling me to add these things in, I'm swiping about on the app and turning it left, right, and there's all sorts of data. And as you're talking about things dropping and falling and rising, you can see in the graphs, can't you, from like the 1 month, the 3 month, the 1 week, 6 months, you can have a real sort of look at the data and see where it's going up and down, and as you're explaining it, it's making sense to me. This is great stuff.
Yeah, so if you look at the bottom as well on those apps, they sometimes have news, as well that's relevant to that index.
Yeah, so when you talked about the TNX there, the latest story there is the 2-year government bond yield logs, biggest daily rise in 3 weeks. And then there's an article to explain that.
Yeah, and so what you're seeing is that bond yields are going up, and that measure, which is the 10-year, you'll start thinking, yeah, do you know what? The bonds are going up, and how have bond yields been moving? And you can then look at it, oh, have they gone in the last month or week or something like that? Then you can start to look at for stories around or research around, yeah, do you know what? Bond yields are going up. And of course, this is, at the moment, they're much lower than they were recently, which spooked the market back in February. But it gives you a good barometer, because back in February, around 2.85 was the mark when markets got nervous. So that's the UK and the sort of currencies and bonds. Jump into America. S&P 500, they just type that in. Dow Jones, so DOW space J, and the NASDAQ, NASDAQ. Now, the S&P 500 is a broad index over in America. It has about 25% tech exposure at the moment, and that's the kind of a broad measure of where US stocks are. So it's got quite a bit of tech exposure. So that's, if you want to know what the market's doing, it's large cap. It's kind of their equivalent of our FTSE 100. You can have a look at that. But the Dow Jones and the NASDAQ are good comparators, because they don't always move in the same direction, and also they don't tend to move in the same scale. So the Dow Jones has 30 stocks in it, but they're very industrial focused, and they are also tend to be some of the ones that are most exposed in the trade war. They're companies like Nike, and those companies have big exports to China. So you will get days where the S&P 500 will go up, but the Dow Jones will be going down. You can see by that measure that that's probably something to do with the trade wars kicking off again, and they're escalating. You then look at the NASDAQ, and if that's gone up, the NASDAQ will probably have gone up even more. You can see that actually what would be driving the S&P 500, the overall market, is the tech side of it. So if you just looked at the S&P 500 on its own, you'd go, oh, the market's up 0.2%. That's okay. But then if you look at the Dow Jones and the NASDAQ, you can see the underlying story quite quickly. You could see if the Dow Jones is down, you go, actually, yeah, it's the market has got a negative side to it, and it's down to this trade war probably again. And the tech, people are moving into tech. And then you start thinking, why are they moving into tech? And it may be because they fear, the reasons why people might be buying tech, because it's held up in the trade war. People also tend to buy tech when interest rates are looking like they won't necessarily rise quickly. So by looking at those three measures, you can already gauge there what the likely stories are. And again, you can then look at the stories at the bottom in the app. Now, I'm looking at it today, and the S&P 500 is up 0.8, the Dow Jones is up 0.75, and the NASDAQ is up over 1. Now, that's a bit of a relief rally, because I can therefore look at that and know, given that at this moment in time, trade war is the biggest thing, that there's a bit of relief in there that the trade war might be easing and less concerned. And you combine that with the VIX that we spoke about earlier, which fell, that kind of confirms it. But the NASDAQ moved higher than the Dow Jones, the more sensitive stocks to the trade war. So you know that it's not all rosy, but people are a little bit easier. So you're still with me, Andy?
I'm with you.
And if I jump further forward, you're going to have Apple on your app because it's an Apple phone. And I've also added Facebook, which is a code FB, and another stock, BA. And that's not British Airways, that is the Boeing company. And the reason I have those is because you've heard me say on the podcast before, as goes Apple, so goes the stock market. And Apple's share price has been leading the stock market a lot. So if you look at that share price, you can get a bit of a feel for where the market is going. If that share price dips massively, it may be an indicator the market is in trouble, because they've been doing a lot of the heavy lifting of the indexes, because they make up a disproportionate amount of the American indices we've been mentioning. Facebook, because it's another one of the FANG stocks, Facebook, Apple, Netflix, Google, but Google's actually called Alphabet. Those have been driving the market, but of course Facebook had a bit of an issue, didn't it, with its compliance and leaking data. So that was also, I added that one in my list because I wanted to see if it was moving in the same direction as Apple. And if those stocks are doing well, then it bodes well at the moment for the US stock market. And the reason I have Boeing is because Boeing is one of the most exposed companies to the trade war with America, because obviously the engine parts and everything like that. So as soon as the trade war sparks, their share price tumbles. And I look at the app now, Facebook shares yesterday were up 3%. Apple's were up 0.8%, so big moves. The Boeing's companies were up 0.08%, so they were only just above the break-even level. So that shows you that the fear of the trade war is still there. If you looked at the overall indices of S&P 500, you'd be thinking happy days. But this shows you there are reasons that the market is still fearful. Now, to rattle through the others, I look at the GDAXI, so GDAXI, that's the German stock market, and I also look at the Stoxx 50E, so STOXX 50E. That one is a broad measure of European markets. Obviously, the German stock market is the German stock market, and they don't always move in the same level because the German stock market is again exposed to China and auto sales. So that is something that's being exposed in this trade war. And as a general measure of European equities, I like looking at the Stoxx 50. Nothing more than just to see how's the European stock market going. And if that is moving differently to the FTSE or the American stock market, I then would be looking at, well, why is that then? I'd be looking for stories as to what's going on there. So this is all a springboard for people to be engaged and try and understand why things happen. And I always say with money, if you can get people to ask questions and start to look at things and try and understand the puzzle, that's when they will get excited and do their own thing. So you look at the way these things are moving and before you look at the news, guess what the lead story will be. You'll get interested in money and it will start to become understandable and not this mystic thing, because it's not mystic. Do you know what I mean? If you can start to sort of predict and go, yeah, I was right. Looking at these, I reckon Trump must have tweeted something, or Mark Carney must have said something, or it may be the market, there's all tanked, there's something that's happened, what is it? The other ones I have on mine are the HSI, which is the Hong Kong stock market, and the Nikkei 225, which is the Japanese stock market. That gives you broad measures of how Asia are doing. And Asia and the UK, and Europe and the UK and America don't always move in line because they're at different times of the day their markets close. But in the morning I look at what Asia did, and that will tend to set the mood for what America might do and what Europe might do. And the one other currency I will now mention is JPY equals X. Bizarre code, but it's the Japanese yen versus the dollar. And the yen versus the dollar almost drives the export-heavy Japanese stock market. So I look at mine now and I see the yen has weakened against the dollar. And I'll be like, why is that? The yen is normally a safe haven currency that when people get spooked, they buy the yen. It's just historically how it works. And so it's fallen against the dollar, and that backs up the idea that the VIX has fallen. The fear is coming out of the market. So you think, great. So if I would therefore think, that would probably mean, because the Japanese stock market tends to move in the opposite way to the yen. So if the yen falls, the Japanese stock market tends to be buoyed. A bit like the way that when the pound falls, the FTSE 100 goes up. When the pound falls against the dollar, that is, and when the yen falls against the dollar. So I now look at what the Nikkei 225 does, and it's up 1% today. So you can see that when those things work in the way they always do, you can kind of predict what the market is, or understand what the market's doing. You can't always. Sometimes the market just does weird things. That's fine. But I find it interesting when things they don't do what I think they're meant to be doing, and it almost is a bit what's going on there, because that makes you ask questions. So the final ones on this I want to say to people to have a look at, I don't think I've missed out any others, I'm just scrolling back through, are if you put in ES equals F, that is the futures on the S&P 500. YM, so M for mother, equals F. That's the futures on the Dow. And the Nasdaq futures are NQ equals F for Freddie. That's the futures, as I say, on the Nasdaq. And what the futures market are, just think about it simply, is it's telling you where the market is likely to open up in America. So let's just say you were sitting there and it's 11 o'clock in the morning in the UK. You don't know what the American stock market's going to do because it doesn't open until the afternoon. You can look at the futures at the bottom of on your app, and it can show you where the market's going to potentially open. It's not like for like, but it gives you an idea. So I'm looking at this now, and it's showing me that the futures are going to be mildly negative, and that will set the mood for what's going to probably happen in Europe as we're going through the day, because people look at that. And it's always like the economy and the stock market. If America sneezes, we catch a cold. So it's always that's why they talk about the futures. So that is a quick rundown of how I look at my numbers and just get a feel. I don't check the portfolio just to see has anything blown up in the market. So I start the morning, look at Asia, then I will look at the futures for America, because it should kind of follow suit what's going on there. They might take a lead from each other. I will then look at what the exchange rates are doing, and I will look at what the fear index and the bond market's doing. And then as the markets open in the UK, I'll start to look at what's going on there and keep an eye on it during the day. And if there's anything untoward on all of those, then that starts to raise questions, because some of this you may start to notice patterns that are starting to form before the market reacts to them. Like the VIX might be creeping up, and you sort of look at that and then go, well, let's have a look at this. There's research around it. Why is that happening? And so it's just a bit of an FYI. That's how I do it. I don't spend my life looking at stocks and shares, but it just indicators that I look at, and it gives me a steer of trying to tell the story of what goes on in a day. But you have to be careful not to get too wedded to it. It enables me to have a pint on a Friday night and not worry about what's going on and bothered. I just look at it and go, oh yeah, okay, the US market did X. So there you go, Andy. Before we move on, Andy, I just wanted to quickly mention 80/20 Investor. Now, 80/20 Investor is my DIY investment service. Do go and check it out. I empower and teach people how to invest their own money. The service provides data-driven fund tables. The data is driven by my own unique 80/20 Investor algorithm, which I created. You also get stop-loss alerts, you get research articles and insight, you get market commentaries, monthly commentaries, and DIY investment lessons, but you also get access to my £50,000 portfolio, which is a portfolio of my own money, which I run live on the site for members to see, and it shows people how I use the service to maximise my returns. And in the first 2 years of doing so, I turned £50,000 into £59,500, which is a 19% return, beating investment managers, professional fund managers, financial advisors, investment banks, passive trackers, and the market. So everybody can have a free 30-day trial of 80/20 Investor, and you can claim that by going to moneytothemasses.com and going and clicking on the 80/20 Investor hyperlink at the top of the page. So go and try the service. Let me know what you think of it, and I know from the feedback that you're going to love it. But for now, on with the show.
Okay, so we've got a little piece on home insurance and also cars, or what cars to avoid, I suppose, is more to the point. Damien, I just noticed the time. We went on there, didn't we? That was good.
I know, I got so caught up in my indices and trying to teach people how they go. I just looked and I've just gone on for half an hour. So, yeah, I just, that was kind of years of thought just dumped into that piece, which I hope, obviously, people found useful. But I've got to rattle through the next two pieces, otherwise we're going to be here till doomsday. But that's okay, Andy. We can do it. Now, I'm going to go straight onto the car reliability, okay? Have you had any dogs of cars in the past, Andy, that you wish you'd never bought?
Not really. I must admit, I passed my test quite late, so I was always relying on friends for lifts during my youth and stuff, and I was quite lucky. By the time I was at a point where I was able to buy a car, I was kind of an adult and self-sufficient, and so did the relevant research and was buying new cars for the first time. So I never really had the old bangers, but I tell you what, I did have some really, really bad motorcycles. I started off on the 50cc's. Oh goodness, I spent more getting those repaired than I did actually buying them.
You did once buy a car that you never drove, though, Andy.
Yes, that is true. I did once buy a car that I never drove because I was planning on passing my test, never did pass my test, and so ended up giving the car to someone else.
This is why the world loves you, Andy. These bizarre stories of the life of Andy Leeks is quite incredible. He has they just keep. It's like the
gift that keeps.
The man who keeps the gift who keeps giving. You're right, Andy. It is. I mean, some of your latest escapades, which we've not even talked about on the podcast, just have me in pieces. They're just sort of. That's why the world loves you. Yes. So on that, I'm going to go through this. What happened is Which have a survey that they get people to carry out. Now, 14,000 people have filled it out, and if they have a car that's between 0 and 3 years old, and you can do the survey. In order to see the results, you have to do the survey yourself. So if you go to What Car, you will find it. And it's a what car reliability. Just Google that and you'll find the survey. And one of the newspapers actually published some of the results for the 10 worst cars. And I like this idea because I've bought cars in the past and they've been completely unreliable. And the moral to this, if you have a Range Rover or a Mercedes, then they may be expensive, but they are unreliable. I'm going to go through the top 10. A Range Rover Sport is the most unreliable car. The Volvo XC90 is second. The Nissan Qashqai Petrol is third, but it also makes a reappearance at 8th for the diesel. Now, I nearly bought one of those, and I'm so glad I didn't. Fiat 500X is 4th. Jaguar XE is 5th. The Jeep Renegade is 6th. The Land Rover Discovery Sport Diesel is 7th. Land Rover, they make a good, number of appearances. We've already done 8, which was the Nissan Qashqai. 9 is the Mercedes-Benz E-Class. 10 is the Mercedes-Benz B-Class. And then I just want to chuck in number 13, which is the Range Rover Evoque, because my brother got one of those and he ended up getting rid of it within about 2 months because he had no end of problems with it. Ended up having to spend about $3,000 of money on it.
Yeah, I've heard that about the Evoque or the Evoque. Yeah, not good.
And funnily enough, Tesla at number 14, Tesla model. So Model S. So that shows you that even the future.
They've released a car, have they?
I don't know. But maybe the person who has that car, the reliability is based on the fact that they haven't got it. But what happened? This is an interesting survey because it's based on people filling out what the problems they had, how much it cost, etc. So you can go and fill it out and find out the results, but it could save you obviously a fortune. Now, the flip side is what are the most reliable cars? You don't seem to see that. I've not gone through and done the survey to see if you get the results when you do it. Now, there is another website called reliabilityindex.com, and this is based upon the warranties that you get people who do warranties like there's companies like Warranty Direct where you can buy a extended warranty for a car, and they have based the reliability on the data that they obviously accumulate in payouts, etc. And there are worse cars have a lot of the similar offenders in their list. I'm just looking at it now, but the reason I mentioned the site is because you can go to reliabilityindex.com and search their database for the best and worst cars, and you can put a make and model in, and it will not only tell you a reliability score, it will also tell you the typical cost of repairing anything that goes wrong and where it compares to other cars and what sort of things do go wrong, like air conditioning, brakes, electrical. So you could get a lot of information about how reliable a car is. And for somebody like me who's not into cars, I just want a car to get me from A to B and be reliable. It's my number one thing. And I've had cars that used to feature in these lists that were so unreliable that I'm now glad that my car seems to not have too many problems. But their list includes Mercedes-Benz again as the worst, but the BMW M5 and BMW M6 appear in there. So the best ones anyway are, they class them as a Toyota IQ, a Mitsubishi Lancer, a Honda Jazz is in there, and there's a Citroen C1. So you can go on there and look yourself. So check out reliability of cars because it is important. It will save you a lot of money in the long run. I've had to pay extortionate amounts of money. That's why I got rid of my last car, because I was just paying out more money for repairs than it cost the car itself. I remember one point not being able to... do you remember the Dartford Tunnel where you have to go and put coins into the basket to get through? I used to have to... The window stopped working, and so I used to have to climb out the car to be able to put money into the automated basket and then to climb back in. Obviously, they don't... Now it's all automated the way that crossing works, but can you imagine that? That is just ridiculous. I'm going off on a tangent, but I did once turn up to that crossing when it used to have money and not have any money, and end up causing the biggest hold up I think ever on the M25 because I couldn't pay to get through the toll booth. And
I once paid for a lady in front of me. True story.
Well, you weren't behind me, Andy, and that's the problem. I didn't have you behind me, and I got told off like a naughty boy and escorted by the police. Right, we've done that piece, Andy. What was the other piece I said?
Well, the other piece is on home insurance.
Right, quickly on home insurance before we wrap it up. Now, there was an article that I read on, I can't remember which website it is now, but essentially somebody complained that their next door neighbour, that the house that was rented, and somehow, I'm not quite sure, but it it caught fire, and actually, yeah, that's what it was. The person who rented it had an electric heater, I think, in their kitchen, and they had stored papers and things like that, and there were too many people living in the property than should have been, and basically there was a fire, and the fire caused this person's front door to be damaged and burn, and so they wanted it replaced, but their insurer just basically moved quickly to repair the door, but they refused to claim the costs from the landlord next door, their insurer, even though there seemed to be clear negligence that contributed to the fire. Well, what happened is then subsequently, when they got their renewal come through, their own renewal on their home insurance went up 30%. And also the insurer had cancelled their buildings insurance without telling them, because they must have deemed they were a risk, even though as far as they were concerned, they did nothing other than have their door burnt down. So the issue is, with home insurance, it's just a kind of an FYI on these things, that the insurer will at some point make a decision whether it's worth pursuing the other insurer, so the landlord's insurer, or going through a court to establish who was responsible and try and reclaim the costs from the landlord's insurer. They may decide, you know what, it's not worth it. It's actually just easier if we pay out on that person's policy themselves, as if it was their own fault. But of course, that's now shot them in the foot. But that's just the way insurance works. So you have to be mindful of that if you're going to make a claim or whatever, that this could happen, and you might have to pursue and try and see if you can get your insurer to actually pursue a claim. But there's not much you can do about it. A reason I mention it is for people to be aware, but also anybody who's been a long-term listener of the podcast will know that my neighbour burnt down my shed many years ago, and almost burnt down the entire neighbourhood and destroyed a load of gardens as a result of not putting a fire out correctly. And the lesson I learned from that, which I just want to reiterate to people, is that your own insurance impacts on what you can claim for. And in my instance, the person damaged a load of things in the garden, patios were scorched, but my insurance would not pay out to repair the damage on certain things because it wasn't covered under the terms of my insurance. The guy admitted liability, it was his fault. Their insurer admitted, yes, it was his fault. But even so, even though it was agreed by everyone involved, you're still not necessarily going to get all the money back to repair things, because my insurer said, under the terms of your policy, we won't pay for damage to the walls or all these different things, because your policy says we'd only repair certain things. And we can only make a claim against that insurer based on your policy, because what we do is we pay out on your policy as if you make the claim, and then we reclaim that money from their insurer. And I think that's outrageous, and the only way I could get around it is if I pursued it in a small claims court to try and make him pay me himself the money to repair it. And even though everybody was, do you mean he destroyed about 7 gardens? It was no qualms about he did it. He one day come wandering down my garden path to apologise after about 3 days, after the place was just looked like someone had dropped napalm on the whole thing. And it just shows you, even in those instances, insurers will squirm to try and get out, and you have to just keep pursuing it. So it's worth just looking at your own T's and C's and being aware of what your insurer does and doesn't cover, because it doesn't matter what the other person's insurance will cover. It's down to yours, because of the way the process works. As in this case, they deemed they didn't want to pay out for that person's pursue the insurer to pay for the door. In my case, they did pursue the insurer, but only under the terms of my policy. There you go. Podcast done, Andy.
Good stuff. So if you want to get in touch with Damien, you can, of course, do so. It's at Money to the Masses with a number 2. That's his Twitter address. And, of course, you can contact him by email as well. Damien at moneytothemasses.com.
And if you've got any house moving queries, you can contact Andy via the same mechanism, and I will be sure to forward it on.
You can also buy my books, by the way. They're not selling too well at the moment.
Buy Andy's books. He works hard on this podcast, and show him some love. What are the books, Andy? Let's name them.
We've got As They Slept. The first one's free. You can just download that for free and then get a taster for it. And then there's parts 2, 3 and 4, where I was really flogging that dead horse as far as I could do. No, they are good. Apparently number 2 is better than the rest of them. Anyway, and the other one was Minimise Me. 10 diets to...
Yeah, and Andy's obviously very modest, but these books got to the top of the Amazon charts of all books in the UK and got to number 5 in America. And Andy even appeared on Australian TV and globally for one of the books. So it is quite amazing. If you go back and actually listen to... I interviewed you on the One Giant Leap podcast, didn't I, Andy?
You did indeed.
I did.
Yeah.
So go and look at the One Giant Leap podcast series that we have done. And Andy's interviewed, and that story's there if you don't know it. It's an amazing story. It's better than Andy's story of buying cars he didn't use. So
sorry, that wasn't meant to be a plug for me. I don't know where that quite came from. I think I was looking at some stats.
Who cares, Andy? Give us a review as well. We need more reviews, and we'll read them out. So until next time, Andy, I think we're done.
Yeah, come on, England.
Don't forget to claim your free copy of Damien's best-selling book, The 30-Day Money Plan. Sort your finances in just 5 minutes a day, worth $4.99. Just go to moneytothemasses.com/podcast to find out how.